Hey everybody, welcome back to the channel. If you are new around here, welcome. And if you are a returning subscriber, thank you so much for coming back. I do appreciate all of you guys being here. Just a recap for all of those who are new to the channel. We are a family of 5 and we are trying to retire early and just really do the things that we want to do. We want to achieve financial independence. We want to start our own businesses, travel, and just spend time as a family. And we're just doing that via investing in the stock market, real estate, cryptocurrency, and just overall increasing our net worth. So if that sounds interesting to you, you want to know more about beginner investing and see our real numbers in all of our accounts, subscribe to the channel, like the video, and join us. And if you are a returning investie bestie, thank y'all so much for coming back. I do appreciate all of you guys being here with me today. So we're going to continue on with the second video in this home buying series. If you missed the first one, where I really shared some really good tips and tricks from our personal experience about how to navigate this housing market, not the old housing markets, but this housing market, how to get your offer accepted, what to look for when you go into homes, things like that. Make sure you go check out that video. I will have it also linked somewhere in the description box as well. So that was the first video in this series. So this video is going to be all more about like our numbers. Okay, I'm going to talk to you about down payments and closing costs and just really have a conversation with you guys about what we are looking for, what we're going to have to put up front when it comes to money as we navigate to buy our third rental property in this crazy housing market. Okay, so I have my notes here because you guys know I got to stay on track. So let's get right into this. Okay, so our budget for our third rental property is $215,000 max. Okay, we do not want to go over that budget. We are not going over that budget. Just to recap, we are looking for either a townhome or a row home. Those are very popular where I live in the Northeast. We're looking for 3 bedrooms, 1.5, maybe 2 bathrooms, but we want to have like 2 toilets basically in the house. That's how I think about it. We're looking for like the little yard in the front, the driveway in the back. We're looking for a finished basement. We're looking for, a relatively updated kitchen and bath. We're definitely looking at good systems like the roof, the foundation, the HVAC, the plumbing, electrical, things like that. Those are high up on our list. That way, when we go into homes, we don't have to waste our time looking at a lot of the fluff. And fluff is good. Fluff is like paint, the walls, how, things like that. But the things that really cost a lot of money, the systems, the roof, like I said, the foundations, we're spending our appointment time looking at that. So I can tell you the neighborhoods that we're looking in is kind of the same neighborhood and vicinity we bought our rental in last year, and we bought that for $170,000. Now our max budget is $215,000. So the amount that the home values has increased is just insane. If you want to see a little tour of our second rental, check out this video right here. I did a home tour of that video that I think you guys will like, and I talk you through that tour as well. But like I said, $215,000 is like our max budget. We're going to be putting 20% down. Some banks require you to put 25% down, but when you are buying an investment property, you will have to put down at least 20%. Okay, so what I try to tell people if they're trying to get into like rental properties is to use their main home first. So if you already own a home, use that as a catalyst to get into rental properties, because you don't have to put down 20% that way. Because what you're doing is you're keeping your current home and then you're looking for a new primary home. See, primary homes, you can put down 3.5%, 5%, something like that. But anything outside of your primary home, you're going to have to put down at least 20%. Like I said, some banks require you to put down 20%. We're putting down 20% on this. That's $43,000. Right? $43,000, 20% of $215,000, and that's just our down payment. That's not closing costs. And then, inside of closing costs, which let's talk about right now. So our projected closing cost is around $8,000. Now our estimate is like maybe $7,300, but we always over budget with closing costs, especially nowadays. Number one, because you will not get any type of seller's assist for the most part. Now I know some people can get it, and we got it last year with our second rental because something came up in inspection and they already had bought another house. So they were really trying to just get rid of with this. So we were in the perfect storm. But for most people, you're not getting any seller's assist, you're not getting any down payment assistance, things like that. And keep in mind, we have a conventional mortgage. This pre-approval that we have is conventional. Why? Because even out here, a lot of the sellers are not looking at FHA, they're not looking at VA, which is a bummer, but I mean, it's a seller's market, so they really dictate a lot of the rules. And so, like I said, we had a estimate of $8,000 for closing costs. We know we're not going to get any assistance towards this, so we're just trying to over budget for it. Inside of those closing costs, and you see me looking down, we have our appraisal and the inspection. Those are usually two costs you will kind of have to pay up front. Like soon as you put your offer in and your offer is accepted, which is great, those are the two things you're usually going to have to pay for, and your earnest deposit as well. So for us, we plan on putting down $1,000 for our earnest deposit. We may even do $5,000 just to show the seller like we're really, really serious. So just be prepared for that as well. So if you put an offer in, you want to make sure you have some capital. So those of you who are saving up for your down payment, these are some of the things you should think about as well. Also, so I mentioned the appraisal. The appraisals, to get an appraisal done, has gone up. For our cash out refi, the appraisal was $640. Last year, when we bought our second rental last year, it was $440, $200 in less than a year. So that's how much we budgeted for this appraisal, for this third rental, and for an inspection, which I suggest you get done. Even if the seller no inspection contingency in your offer, still get an inspection done. And we're budgeting about $640 for that as well. I mean, you guys got to remember, these are costs, they're included in your closing costs, but you got to kind of pay these up front. So you want to make sure that you you have that capital for that as well. And keep in mind, you don't want to get in the habit of doing too much charging on your cards, and you definitely don't want to buy any big purchases, or, and this is a big or, open up new lines of credit. Do not go out and apply for a credit card. Do not go out and apply for a car loan, anything like that, because I'm telling you, it will derail the process. When the underwriter goes back and sees all of that, they will kind of alert you about it and say, okay, explain this to us, all of that. So I just want to keep that out there for you guys. But we have the cash for that, and we're going to get that done. I just can't believe how much the appraisal and inspection is. Like, crazy, right? Next is our interest rate. So our current interest rate that we have for our pre-approval is 5.75%. Now that is definitely higher than primary interest rates, but keep in mind, this is an investment property. If you're going out to buy an investment property or a vacation home, yes, this is normal. I've seen people that have 6, because why? The bank views it as a riskier asset. You are a riskier applicant, because most people, if they fall into financial trouble, they're going to take care of their 4 walls first before they think of taking care of, like, a rental property or a vacation home. And the bank knows this. So again, they charge you a higher interest rate as a result. So that is something that we just have to deal with. But it is what it is at the end of the day. You can pay points down, and I think we're going to pay a point down on this. So that's just how it is. And your points are usually about 1% of your sales price of the house. So just keep that in mind, and just ask your agent or your mortgage broker about it, and they'll be able to give you more details. Next is we're not having any PMI. So they had PMI down, but they had a 0 next to it. Why? Because we're putting 20% down. So though we have to put a lot up front, the perk is that, and the payments that we make every month, we won't be charged PMI, which is private mortgage insurance. Is something that the bank charges you if you don't put down 20% to protect themselves. And then lastly, our projected rent for this third rental property. So just a recap, for our first rental, we get $1,800. For our second rental, we now get $1,800. And for this third rental, we're actually projecting $2,000. The area that we're looking in, we've looked up the rental comps. We know people in the area, they're getting easily $2,300, $2,500 a month in rent. We're looking at around $2,000 for rent. And our payment, when this is all said and done, should be around $1,400. So, that's about $6,000 and keep in mind, I've actually seen people talk about, how you have housing bidding wars. There are like rental bidding wars going on. I was like, what, for real? Until I saw it. And so you may have a rental listed for $2,000, for example, and have like 20 people come in, look at it, put applications in, and there are people that's like, oh, I'll give you $2,300 a month in rent. I'll give you rent up front for a whole year. I will sign a 2-year lease and give you all the money. It's it's really crazy out here. But I tell you guys, one of the things we try to be as landlords is fair. But remember, this is also a business for us. We have property taxes, rental license, we have homeowners insurance, all these things going on as well. And so, you know, it's a tight line that you walk, but at the end of the day, it's been working out for us and our tenants stay. So that's what we're really looking for, I think, as a, you know, in this whole process, is we want tenants who stay and who pay. Hashtag stay and pay. So that's pretty much all of our numbers when it comes to this second rental. I wanted to make sure I kind of lay it all out there for you guys, and so that you know what to expect if you are trying to get a house in this market. Will the housing market crash? I don't know. I can't foresee the future, but just going out to a couple of open houses, and even with the investors, it's just regular people. Even with buying homes, like for the first time, it's regular people who are putting down cash offers, like your average Joe and his wife, or single women. Oh my goodness. I saw a Black lady who I literally had to just stop and give kudos to. Sister was buying her house in cash, okay? She says she's just been saving up her money. A lot of people have been doing that. And as a result, they're able to be really competitive with their offers. So if you are trying to get into this housing market, my number one tip for you is to save. Get your capital up, okay? Get your down payments up, at least if you can do like 3.5%, maybe 5% would be better. Try to get a conventional mortgage. Have more than enough for your down payments. Be prepared to get your appraisal and your pre-approval paid up front. Have a earnest deposit money available as well. And of course, try to get good credit, if not excellent credit, because the interest rates are going up now, especially for investment properties. And you want to make sure that you can get the best interest rate possible, and your credit is super important. I know Dave Ramsey says, you know, no to credit, but I'm telling you, you need good credit. I'm not a financial advisor, but I think most people would agree you need good credit, not just to get into a home at a decent rate, but some jobs even look at your credit. And I believe if you're going into the military, sometimes they check your credit. So having good credit is very, very important. It makes it determines how much it'll cost you to borrow money. And you don't want to have to pay so much to borrow money, especially on a home you want to own for a long time. So that is the video on today. Leave me a comment down below. Let me know if you have any questions. Again, thank y'all so much for watching, and don't forget to hit the little bell notification button so that you don't miss an upload, and follow me over on Instagram. If you need more one-on-one help, someone to kind of run all this through, you're more than welcome to book a session with me. I have 15 minutes, 30 minutes, and an hour, and I know a lot of you have used it, and I'm so happy that you trust your investie bestie, because sometimes we need another person to like look at it, or we need to kind of lay it all out for someone else to hear, to see it. And I'm hoping that I could be that resource for you by coming on here and showing all of our information, showing all of our real numbers, so that you guys can see that, you know, I really do try to change the face of wealth. Not only that, but to be transparent, because I want to take the taboo-ness of money away. So again, guys, thank you so much for watching. And until next time, you guys already know, I'll see you in the next one, okay? Have a good one.